In this video, we're going to talk about some very important tools that we'll need to understand with respect to financial planning. And that is, we'll need to understand how do we create and analyze personal financial statements. So let's think about some definitions, some terminology, if you will. A personal cash flow statement looks at a person's inflows and outflows of cash. Inflows is anything that creates revenue, salaries, interest, dividends. Could be the sale of assets as well. Maybe you sell some stocks or bonds. Cash outflows, of course, are all those things that go out the door. They could be large, they could be small, they could be monthly, it could be one-time types of purchases, if you will. But we need to create a statement that's going to help us record these revenues and expenses. And of course, the outcome, the number that we're interested in, is the net cash flows. This is cash inflows minus cash outflows. Now, let's think about how we can do this. How can we create this statement? Why don't we take our checkbook from last month, or the checkbook, if you record your banking transactions online, maybe we can look at your online process, right? Most of them will create cash flow statements to show inflows, outflows. But this just shows us what happened last year. We're also going to want to predict or try to determine what's going to happen next year. And for me, I think this is really the most important part of the process of using personal financial statements. It's not enough to know what we've done. We have to kind of think about what might happen, right? Many of the expenses that we have are fixed. They don't change from time to time. So we're not going to be able to make any drastic changes to those types of expenses, if you will. However, there are many expenses that we make throughout the month that we will be able to make changes to. So we need to understand where we're spending our money. So when we're planning for spending, planning for investing, planning for retirement, we know where the cash will come for those particular types of outflows. So the process for me is a two-stage process. What have we done? What happened last year? What do I think is going to happen next year? So we'll start with some inflows and outflows of cash. And again, as you look at these, this is a monthly cash flow statement. But we need to look at some disposable or after-tax income, right? This is just, if you think about your paycheck, this is your paycheck for the month. There's interest on deposits, maybe dividends, right? But we have a total cash inflow. Then we have cash outflows, of course, recording all those. And as you go down the list here, rent probably won't change from month to month. The internet probably won't change. Cellular probably won't change. Healthcare insurance, right, for the most part probably won't change, although there could be some stuff that changes, like medicine, etc., from month to month. But these other things, right, the amount of money you spend on groceries, clothing, car expenses, right, some of these are variable. What you spend on recreation, right, these things, some of these things are fixed and some of them are not. Some of them are again, what you might refer to as something being discretionary. You can decide how much money you're going to spend. So in the end, if you look at this particular example, we've got $400 left over at the end of the month. But if you look here We also don't show any kind of savings, right? There's no money going to savings. So what do we do with this extra $400? That is the plan. That's how we're going to use these statements. So what kinds of things affect cash inflow? Well, where are you in your career path? The younger you are, the more likely you will have more rapid advancement, right? Incomes may increase as you change jobs, get promotions, etc. The type of job you have obviously is going to have an impact on the inflow of cash. How many income earners are there in your household? All of these things obviously affect inflows. Outflows, size of the family, your age, your personal consumption behavior, right? Some people spend all of their income and more, while others spend mainly on necessities and concentrate on savings. Where do you fit in that goal? Where do you think you will fit when you leave the university? Where do you think excuse me, where do you think you will fit in this personal consumption game, you will? A budget is a cash flow statement that's based on forecasted cash flows. And again, budgets are really useful if you think about looking at your spending patterns, right? It's just as important to know where you have spent your money as to know where to spend your money. So we have to look at both things, right? We have to anticipate what do we think is going to happen. And as I mentioned, most stuff is fixed. There are only a few things that are truly variable that we'll even be able to make decisions on. So again, here we have our actual last month's, and this is what we expect to happen in the next month. And again, as you see down here, we've had some changes. So in this case, we anticipate at the end of next month, we're going to need $200 more than what we needed this month. Where's that $200 come from? Again, this is the process. Let's identify where we think we're going to go so we can make plans. We don't want to get to the end of the month and find out that this $200 is a problem, right? That we have, where are we going to find that money? So small shortages we can usually make up from things in your checking account maybe, but long-term things are going to be much more difficult to handle, right? So again, we want to make sure and try to understand where our money went so that we can plan and make sure that we always have enough funds for what we want to do. So anyhow, that's where we're going to start. So how do we do this? Now we can do this by hand, but I've found that it's a little easier if you have some type of a visual cue. So I've created some worksheets, and these worksheets are very helpful. They just give you ideas about where to plug in numbers. It gives you, well, I didn't think of money coming from there, or I didn't think of that bill. So the cash budget has two parts of it. The first part really looks at the fixed cash flow components for a year, or you could do this on a monthly basis, of course, but we just need to fill in the data. So there are sections for cash inflows. So here's the cash inflows. You got salaries, dividends, rents, interest obviously could fit in there, maybe a pension, if you get alimony or child support. And of course, there's a place for other income if you need that. So we need to understand what is our total cash inflow. Now, we could do this for last year and then predict what we're going to do next year. Where are the taxes? Now, the salary that's here is our gross salary, because we also want to understand how much of our income goes to the tax man. So here we would put in our federal income taxes, state and local, if you pay real estate taxes or any other taxes, again, we want to have an idea of how much of our money goes to the tax man. Why? Because we may want to talk to a tax professional and see if we can find ways to reduce that tax burden. What about our insurance payments? And most of these are all fixed, right? We need to know how much is going in towards these expenses. Again, why? Again, in the end, we want to know what percentage of our income are we using to protect us. Is that number too big? If the number looks like it's too big, maybe we need to go shopping and find another insurance company. Or maybe we need to look at our policies and try to determine whether or not we have the right amount of insurance. The fourth place we want to kind of identify here is our debt cash flow. Do we have mortgages? Do we have car loans, credit cards? And again, I've given some extra places here if you want to add some extra things here, but you can add them here. Of course, you can always add lines to this spreadsheet, etc. But again, in the end, what do we want to know? We want to know what percentage of our cash goes towards paying debt. The banks will use some of these numbers to look at for mortgages. In fact, the payment relative to cash flow, they're going to want to know what is that percentage, because they will base whether we even get a loan based on that number. But if they're going to give us a loan, they may also even base the interest rate on that percentage. Finally, we want to look at savings. Is there company retirement, personal retirement, any kind of personal savings, an emergency fund, right? We want to see where this cash is going, again, either on a monthly or annual basis. So in the end, what we will end up with is, here's our total cash inflow, and now here's the cash outflows from taxes, insurance, debt, and savings. So we'll know what percentages those are, and then finally we'll have a plug figure, which is the living expenses, right? So the living expenses is what's left over, right? We have the cash inflow, subtract all of these fixed payments. This is what's left over for living expenses. Sometimes I refer to this as our quality of life number, right? How much money can you spend after we've covered all of the fixed expenses that we have? The second part of this then is the variable expense component. Again, this can either be done on an annual or a monthly basis. Let's just assume these are monthly expenses. So what categories do we have? Housing, family, transportation, giving, leisure, right? So here we have these components where you can plug in the values that you think you'll spend. Now, for rent, right, we don't have to worry about rent, because if we own a house over here, we had the mortgage payment. So again, if you own a house, you'd use the other fixed payment. But if you have rent, again, we want to show that here. Not that it's variable per se, but we want to show all the expenses of owning a home. They're all here: rent, telephone, utilities, furnishings. What about family, groceries, medical, childcare, right? All of these things fit in here that we spend on our family. What about transportation? Obviously, the loan payments aren't here. This is just things like gas, oil, maintenance. Do you give to charity? What about leisure? Here's where I want us to spend most of our time thinking about what can we do to save some money. And if you notice here, I subtracted out cable and entertainment, because I find cable is probably the thing that people most overspend on. It's not uncommon to find somebody that has 6 different premium channels, etc. You know, they spend $200-300 on cable a month. Well, you can only watch one channel at a time. So again, maybe that's a place we might be able to ultimately save some money. So in the end, what do we have? We have the total cash flows from the previous example. Here's the living expenses. So now we have total cash outflows. What is the total cash outflow of the company, of this person? The plug figure then we have, again, the total cash inflow comes from the previous slide, right? Now we have the total cash outflow, that's this number here. The difference is what we refer to as discretionary income. Couple of ways to think about discretionary income. It says, look, you have paid all of your bills and this is how much is left over. So the question is, what do you do if you have extra money? Right? We'll talk a little bit later about what do you do if you don't have enough money, but what do you do if you have some discretionary income? What should you do with that money? Well, quite frankly, there's only three things you could do with that. One is you could put it in some short-term rainy day kind of fund, and you should always be trying to fund some type of emergency fund. Number two, take the other money, whatever's left over, and think about placing that towards debt, paying off your debt ahead of time. And the third thing you obviously could do is think then about investing, right? Maybe you're already investing in your company's retirement. If you have a financial plan, maybe it'll tell you whether you need more money or whether you're funding it properly. Maybe you just want to start saving for some major purchase. This is the information that we get from this discretionary income. So we want to forecast these net cash flows over several months, right? We want to see where we're going. We want to maybe take into account some seasonal things that we may spend money on. We may want to have some type of maybe a side fund for unexpected expenses like medical care, home care, maintenance or something, right? Next, we want to then create an annual budget by just extending this out for a year. So here we have, again, here's the cash inflows, here's the cash outflows. And what we're looking at here is, sometimes they refer to this as forecasting error. I like to think of this as variance analysis. I expected a certain amount and something happened. What's the difference? Now down here, I thought I'd spend $300, but I only spent $280. So that means I made an error. I made a mistake. Well, why did I make a mistake? Is this number overestimated? Did I make a mistake in that? Or did there just something happen this month and I just didn't spend as much money? What about clothing? Well, it turns out that my best pair of sneakers blew a hole. So I had to spend an extra $70 on sneakers. I wasn't expecting that. So these are all the things when you're looking at a budget and what you have planned to spend. Compare that to time as it happens. Where are we making these errors, they call them? Where are we off base? Is it something that we can fix, right? That's what the analysis is all about. So how do we improve the budget? We need to look at it and periodically review it. I wouldn't say to do this on a weekly basis. A monthly basis might be the most frequently I would take a look at a budget, but in general, monthly should, or maybe quarterly should be the time frame to look if you're predicting on out into the future. And again, we're just looking for things that we can change, things that we can improve on, right? Is there a way to make more money? Can we get more income? Or are there places where we can start to reduce cash flow? Again, we have to focus. We have to make this some ethical thought, though, right? We don't become overly dependent on other people, right? Rely on yourself to get the job done and to make your way in life. Create a budget and stay with that budget. Now, there is a website. It's called moneycrashers.com, and this is a link to how to make a budget. And this talks about 12 steps to making an efficient budget. And again, this site is part of some of the personal exercises that you'll do for this particular videos exercises for the chapter. I look forward to seeing you in the next video.